Good evening, good morning to wherever you guys are in the world. Welcome back to another episode. Today we're just going to be talking kind of about anything. I don't really have a whole bunch of stuff kind of on the docket. I've been kind of just learning or I guess doing a little more deep diving into the metals market. And man, there's just so much fascinating stuff. We're going to cover some of that stuff that I've been just keeping an eye on. There was some news articles that came out over the weekend for Micron, nvda, and the New York Stock Exchange. So we're going to be covering that as well. Again, this is all just invest and chill, right? Today's Monday. U.S. stock market was closed. So, not a whole lot of action. Everyone's enjoying their holiday weekend. So, we're just kind of chilling, right? I'm just having my coffee, going through the news, and decided, hey, you know what? Why not kick up a stream and then kick it with you all? So, well, let's get into it, guys. Let's get into it. Okay. So first things first. All right. So, one little piece of news that I found, I thought this was, again, you might be bullish on Ethereum, right? We talked about BMNR yesterday. We talked about, or the last time we did a live, we talked about BMNR. We talked about how the Ethereum blockchain, all these large institutions are moving towards it. We talked about Citi. We talked about JP Morgan. We talked about Bank of America. We talked about everyone else. There's Societe Generale out in the EU. I forget. I think it's a French bank or something. But anyways, we talked about that, right? So this I thought was really interesting. Again, if you're a big believer in the whole Ethereum super cycle, right, as Tom Lee likes to call it, if you're a big believer in that, if you're a believer that that the Ethereum blockchain is going to be the next financial step, right, for Wall Street, it's going to be the next evolution of finance, then this is an interesting development, right? This is a really interesting development because one of the big things for Ethereum, one of the big things that Ethereum is so attractive for institutions is 24/7, right? It's on 24/7. It's had a near perfect record of being on since its inception, right? Since Ethereum blockchain came about. So that has been a huge plus for, these institutions looking to move onto the blockchain. Plus, I mean, there's tons and tons of projects that are built off Ethereum's blockchain. So anyways, this piece of news came out. And again, I just thought it was really interesting. New York Stock Exchange reveals trading platform for tokenized stocks and ETFs. All right. Tokenized stocks and ETFs. This is where we're headed. This is the world we're heading into. All right. This is the direction. Tokenization of equities, tokenization of real estate, tokenization of bonds, of money, of gold, of everything, right? There will be tokenized. There will be everything will be tokenized. If you can invest in it, you could buy it, then it'll be tokenized. At least that's kind of the prevailing thought, right? So again, I just thought this was a really interesting development. This is the New York Stock Exchange, okay? The city that never sleeps may soon have a stock exchange that runs all night, powered by blockchain. The New York Stock Exchange, operated by Intercontinental Exchange, ICE, and not that ICE, all right, announced Monday that it is developing a blockchain-based trading platform for tokenized securities, one that would operate with instant settlement 24 hours a day, 7 days a week. Instant settlement, no more 2 to 3 days. That is so freaking crazy. And I see Padres in the chat. I see Evil Duck. Overnights are open and things are dropping. Yeah, of course they're dropping, right? Of course they're dropping. Let me pull it up since we're already here. Let's see. I can't pull it up actually. You know what? Let me come back to that because I definitely want to check it out. We were talking about this. We were talking about that the VIX is high and everything was going to start dropping. So, hey, is what it is. All right. But anyways, the new trading platform will support the trading of tokenized shares of traditional securities as well as native tokenized securities while allowing investors to participate in shareholder dividends and governance. Again, just really, really interesting that the New York Stock Exchange is moving towards tokenization. The firm is working with major banking institutions, BNY and Citi, to assist in the tokenized deposit process, as well as fund transfers and management across its clearinghouse outside of traditional banking hours and across different time zones. Absolutely insane. Absolutely insane. All right, let's take a quick look at overnight. Overnight, we gotta see how much we're losing. Holy crap, that was a drop. Damn. Damn, where'd you find this? Yeah, that is not looking good. Yeah, so the S&P is already down 1%, just straight off, right off the bat. Yeah, so S&P is already down right off the bat. Let's see. Futures. All right. Yeah, it's I guess this isn't showing it, or maybe it is, maybe it isn't. I don't know. I'm looking at Robinhood on the right. Of course they're dropping. I must have bought recently. Yeah, that's probably true. I bought one share and I needed to drop the market. Anyways, guys. Skeptic, what's up? I got some really cool things to show you guys here in a minute. With metals. Let me blow through this stuff and we'll hop into the metal stuff, because I'm sure I'm sure Evil Duck and Victor already know this, right? But it's crazy when you start connecting the dots and you start going down that rabbit hole, how everything just starts to make sense. But anyways, yeah, we just covered the tokenization of the New York Stock Exchange going to 24/7 using the blockchain. They didn't say which blockchain specifically, but very likely it's going to be Ethereum. And if that announcement comes out that they are using the Ethereum blockchain, I think that will just be a really, really good tailwind for Ethereum. All right, so we'll see if BMNR, Ethereum can start to climb, and probably Robinhood for that matter, because Robinhood's not really a super proxy for Ethereum, but they do. I believe they have some type of tokenization on Ethereum. I don't know if they're doing the tokenization that they do for Europe off of Ethereum. I feel like I did hear that, but so don't hold me to that. Anyways, let's move on. NVIDIA H200 chip part suppliers on pause. This is a big development. All right, suppliers of parts for NVIDIA's H200 chips have paused production after Chinese customs officials blocked shipments of the AI processors from entering China, the Financial Times reported. Again, this is just China just being a D-bag. They're trying to wean off of NVIDIA. They're trying to, kind of stick it to the United States. And they're trying to, basically force domestic companies to rely on domestic Chinese chips. All right, so I think this is, of course, a political play. But the demand for NVIDIA's H200, the demand for NVIDIA in general in China is large. I think the government over there is probably going to have to cave in at some point to their commercial sector, because their commercial sector, they want these NVIDIA chips. They absolutely want these NVIDIA chips. All right. NVIDIA had expected over 1 million orders from Chinese clients, the report noted, adding that its suppliers had been operating continuously to prepare for shipping as early as March. All right. NVIDIA didn't really comment on anything. So that was just in the news. All right. Just wanted to put that out there. It's probably bearish NVIDIA. But again, NVIDIA has kind of discounted China from a lot of their revenues. I haven't really heard Jensen really mention anything about China or the China market. So we'll kind of see where this is going. Earnings season is starting to kick up. So we'll, have to hear from NVIDIA at some point during this earnings cycle. Coinbase is another one. I see it from Evil Duck. Coinbase will definitely have a jump, because they're just they're the crypto center exchange. So this one was also really cool. We covered Micron in the last stream, and we're talking about there's the big three manufacturers of DRAM, right? We covered a DRAM ETF. But in this one, right? So anyways, just a quick summary about what we spoke about. So Micron, Samsung Electronics, and SK Hynix are the three big producers of memory, right? Of memory. And there's this insatiable demand for memory from chip manufacturers and basically PCs, computers, Dell, you have HP, right? You also have wearables, you have Apple, you have Apple Watches, you have smartwatches, you have PCs, laptops, everything, you name it, right? there's this insatiable demand for memory, right? And as the industry continues to push for more AI-centric hardware, the demand is just skyrocketed, right? So Micron came out and said this not too long ago, and this is really, really interesting. Again, if you're just a believer of the whole AI thesis and bullish on the AI sector, Micron Technology, a key supplier of NVIDIA, said the global memory chip shortage has intensified over the past quarter and will extend beyond this year. That means their 2026 is all, like they mentioned it here in a second, but 2026 is already bought and paid for. Like they have no more. Everything's already bought and paid for, right? Driven by surging demand for advanced semiconductors used in AI infrastructure. And we talked about Roundhill coming out with a new ETF in the future called DRAM. So again, something I'm going to keep my eye on. I think that's going to be a really interesting kind of maybe a tertiary type of play if you're playing on the AI thesis, because at the top you have software, the middle layer you're going to have the semiconductors, and then you can have a more kind of carved out sector for memory, right? DRAM. So the shortage we're seeing is truly unprecedented, said Manisha Bhatia, Micron's executive vice president of operations, in an interview with Bloomberg following the company's groundbreaking ceremony for a planned $100 billion manufacturing complex near Syracuse, New York on Friday. His comments reinforced guidance Micron's first outlined in December. Here is that piece right here. Bhatia said high bandwidth memory used in AI accelerators is consuming so much of the available capacity across the industry that it's leaving a tremendous shortage for the conventional side of the industry, i.e. phones or PCs. As a result, PC and smartphone makers are now scrambling to secure memory supply for periods beyond 2026. Absolutely crazy. So is a 250% jump, that Micron had for basically all of 25, is that going to fizzle out, or is it going to keep on going higher, right? I think, look at this PE, it's 11. Like, that is so crazy. This is 11, right? It's a $408 billion company. It's almost at $500 million. It'll probably keep chugging all the way up, right? Probably, I don't know, 750, maybe $1 trillion. Like, this could become one of those most valuable companies in the world. But yes, anyways, I thought this again was a really interesting data point, especially for those who are looking for plays, or those who are, kind of just interested in the whole AI thesis, investing in AI CapEx spend, right? All right, so that was pretty much really quickly the news. The rest of these tabs at the top is kind of just stuff about metals, right? Metals market stuff. Again, I'm not a super in-depth metal guy, right? I'm not a metalhead, but I have been going down the rabbit hole, right? I've been going down the rabbit hole. I just find a lot of this stuff very interesting, very fascinating, because if you look at the geopolitics that's happening in the greater world, you have the United States trying to acquire Greenland, and let's keep politics out of this, but let's look at it from a tactical point of view. Why would the United States be so interested in Greenland, right? And the simple fact is Greenland has 25 of 34 critical raw materials that are very important, right? Rare earth minerals. It's sitting on 36 million tons of this stuff, right? So you can see why America is so interested in the acquisition of Greenland, right? America is obviously, if you look at a broader context, America is trying to get away from China as a supply chain. China is arguably the #1 producer of rare earth metals, right? Mining and all that stuff. So trying to get away from our biggest rival, our biggest competitor, and basically weaken them. So I don't know. I haven't gotten that far in terms of DD, how much the United States purchases from China, X the rest of the world. I think it would be very interesting. But a lot of this metal is needed for a couple of things: national defense, weapons, that kind of stuff. But not only that, it's used for this huge data center build out that the United States is very focused on, right? All these companies basically investing tons and tons of money into the United States to build data centers. And then under that, you need all the power, you need the copper, you need the fiber, you need everything else that's going under this stuff, right? And then, of course, you have the data centers filled with, data equipment, right? Servers, hardware, chips, semiconductors, switches. You have all of that stuff, HVAC. You have all of that stuff that's in a single data center, right? And all of that stuff is going to consume some form of metal. So just, again, going down the rabbit hole, This is why, in my opinion, Greenland, and it's a fact at this point, Greenland is important for this reason. It's not just because the United States wants to put a bunch of, Patriot missile batteries over there or start up a new base. That's not the case, right? That's not the only case, right? Both things can be right. So going on that whole critical mineral thing, and again, this is not my core competency. I got to put it out there. I got to keep putting it out there. I found this to be interesting, right? Okay, so Alberta, and again, to any of the Canadian audience out there, I'm not for or against this. I'm just reading the article. All right. I don't even know like Canadian politics all that well. But there's this article I just found was interesting. Long lineups in central Alberta to sign petition for province to leave Canada, right? So they want to leave Canada. They want to become their own sovereign nation of some sort. I honestly think this would probably be a proxy for the United States to get into Alberta, right? In some way, shape, or form. But this is what I found interesting. So the petition was brought forward by Mitch Sylvester, CEO of the Alberta Prosperity Project. Okay. There's just a line in here that I thought was interesting. Bowman, who's a nobody, at least I haven't found anyone or anyone, I guess, in the public facing named Bowman, from this prosperity project, also spoke about the grievances, like being tired of equalization payments and why she thinks sovereignty feels like a viable option. Jobs, homes, the ability to actually develop all of our resources, she said, not just oil and gas, but our agriculture, critical minerals, forestry, everything is hidden behind red tape. So the critical minerals is the thing I wanted to focus on. So just, again, going down that rabbit hole, looking at Alberta, what is so special about Alberta? So looking at Alberta's Prosperity Project, and again, I know this is going off way into the deep end, all right? So bear with me here. Going off this, Alberta Prosperity Project, just trying to understand, like, who are they? What are they trying to do? Basically, again, they're trying to create a sovereign Alberta. But there's an interesting note, right? This is part of what their vision is. Their First Nations participate as equal founding partners with constitutional protection of the treaty rights and revenue sharing from the development and transport of our natural resources. All right. So again, in my thought is probably some type of mining, right? Some type of mining in Alberta. So what does Alberta actually have that's valuable, right? That they could ship, right? Because Alberta actually has no active traditional rare earth mines in the province, right? They're not mining anything. And you can look here on this map, and this is being provided by the government of Canada. Just scrolling down, this is Alberta right here. They have a preliminary economic assessment, the SBH Black Shale project, I guess, right? But there's nothing, there's no active mining in Alberta. So it's pretty much a blank canvas. So I just thought that was really interesting. Again, just going down the rabbit hole, continuing to look. Okay, so there's no active mining over there, right? So what critical minerals are in Alberta? So this is coming from Alberta Energy Regulator. These are the rare earth minerals that they have. So I thought that was just interesting. Again, you have cobalt, copper, gallium, germanium, lithium, used in batteries, rechargeable batteries, electrical wires, and metal alloys for copper, cobalt, rechargeable batteries, gallium, LEDs. Let's see, nickel, stainless steel batteries and coins. What else we got here? Rare earth elements, permanent magnets, scandium for fuel cells, uranium for nuclear power. That's a big one, right? The United States is trying to put a focus on building out nuclear power. So again, just interesting stuff, right? Interesting stuff. And kind of moving on from that, you guys can check out the USGS, and they have a whole list of critical rare earth metals that they deem as critical. So again, just trying to connect dots here. But this was probably the big one right here for me. For me personally, I thought this was the big one. Trump talked, and this is coming from the Organized Crime and Corruption Reporting Project. Okay, as Trump talked about taking Greenland, former employees gained a foothold in the Arctic island. All right, so two men with the Trump organization hold shares in GreenMet. I didn't have a chance to look at GreenMet or who they are or what they're actually doing. But again, here it is, right? So former employees who sought or are seeking opportunities include George Sorial, the former executive vice president and chief compliance counsel of the Trump Organization. Also in the group is Keith Schiller, who ran Oval Office operations in the White House during Trump's first term. Both men have an interest in a company called GreenMet. Okay. In 2025, GreenMet announced they had linked a strategic partnership with Tanbreeze Mining Greenland, right? A company holding a license to mine rare earth metals in Greenland. GreenMet described Tanbreeze as the only shovel-ready rare earth project in Greenland, right? GreenMet is the trade name of Green Tech Minerals Holding. Sorial and Schiller appear in Washington, D.C. corporate registry documents among the beneficial owners of the company, along with Drew Horn, who is listed as the CEO. All right, Horn was basically an insider as well. So, I mean, I'm just connecting dots, guys. Like, I'm just connecting dots, okay? So when I am of the thought that I don't think there's going to be like a military invasion or a capture of Greenland. I don't think so. But who knows with the current administration. But what I do think, right? What I do think is that there will be a deal struck some way, somehow on the acquisition of Greenland. Whether, you know, they just say, hey, you know what? We'll just give you a bunch of T-bills and call it a day, right? We'll just pay you in T-bills. Or, you know, there's some other type of concession, right? I think the United States at the end is definitely going to acquire Greenland somehow, some way. I know that might be kind of scary, especially for anyone who's out there. It does seem kind of imperialistic, you know, from a perspective that the United States is doing, you know, imperialistic crap. However, you know, looking at it, and if you're trying to make, you know, kind of a bet on the future, mining might be something, right? Rare earth mining metals might be something you include in a portfolio. Victor Sank says in Canada, mining is focused a lot in BC and Yukon, top 10 in the world, and more to be developed. That's what I'm talking about. All right, so let's get to the ETF, right? So this is just the ETF I found. Thought it was a little interesting, so I figured, hey, you know what? Let's include it in the stream. We could just take a look at it. So this is DMAT from Global X. All right, so this is DMAT. And you know, why would you, or disruptive materials ETF, why would you invest or consider DMAT, right? As part of a portfolio. Mineral demand from clean energy technologies could increase around 4x from 2023 to 2040 under the new net zero emissions. Structural tailwinds, supply shortage risk exist for in-demand minerals, which could support prices for materials such as lithium, copper, nickel, and cobalt. Unconstrained approach. The universe of companies involved in the supply of disruptive materials defies traditional categorization. DMAT invests accordingly with global exposure. And this is what it's targeting, right? It's targeting materials include companies involved in the exploration, mining, production, and or enhancement of rare earth materials, zinc, palladium, platinum, nickel, manganese, lithium, graphene, and graphite, copper, cobalt, and carbon fiber. Speaking of graphite, I've been watching Chernobyl, HBO's Chernobyl. It's really, really good. A really good drama. But yeah, there's a scene where this firefighter shows up after the plant had exploded, and he's like just holding this rock, right? This shiny rock. And it turned out to be graphite, right? I guess the rods that go into a nuclear reactor are made out of graphite, or they had graphite tipped rods. And when the plant exploded, that graphite went everywhere, and people who are picking it up like just start burning and, you know, sizzling at the hand. So it was really, really it's a really good show. I recommend people like check it out if they're interested in that, in history, right? There is some creative stuff that Wall Street, creative stuff that Hollywood does. But anyways, let me get off that tangent. So anyways, DMAT, disruptive materials, seeks to provide investment results that correspond generally to the price and yield performance before fees and expenses of the selective disruptive materials index. One thing, again, that's interesting, this is a global exposure, right? A lot of their mining companies that they have in the ETF are in China, the United States, South Africa, Britain, Australia. So again, I invested more so in the companies or in an ETF that's ex-China. So that's just me. That's just my own preference. You know, I'm sure there's some metalheads in the chat that would probably say that investing in mining companies in China have been very lucrative over the period. Me, I'm just of the camp. Eventually, something's going to happen, and I don't want to be exposed to anything from China. Now, again, this is a globally diversified ETF. So again, you have a little bit of safety there, depending on what your thesis is, right? Here are the industries, materials, mostly materials, right? Your metals, minings, etc. So again, if you want just exposure to this stuff, right? If you don't want to be looking at each of these individual companies, right? Because these are the miners, these are the companies that are in that ETF. And you don't want to do the due diligence on every single miner. You could just own kind of the market. This is just one way to hold a thematic ETF in your portfolio, so you get kind of that exposure, right? So you get that exposure that you're looking for. If you believe in that whole, mining metals kind of thesis out there, that supply is going to be so constricted that the United States is going to have to look elsewhere. And if in my opinion, the Greenland deal does come about, there will be a lot of miners headed that way. Maybe something from Alberta. We'll hear about that. So anyways, yeah, that is kind of my stuff that I've been just looking at and kind of diving into. I don't hold a position in DMAP. Again, I just think it's a really fascinating ETF. I do hold, full disclosure, I do hold positions in, there's metal, METL, and in SETM. I also hold SIL from Global X and GDX from, I forget who, ProShares, I think, I forget. So I do hold those ETFs. So with that being said, guys, let me open it up to the floor. How's everyone doing? How's your weekend? Shoot, that was pretty much it. I wasn't trying to squeeze a whole hour out of this stream, honestly. I'm just hopping on to hop on, right? But yeah, how's everyone doing? How's the chat doing? How are you guys doing? Are you guys enjoying your weekend? Did you guys do anything? I know it's still snowing in some parts of the East Coast from last I heard. Skeptic says Greenland will have the honor of being the state of being the 52nd state. Yeah, probably. And that's kind of what I'm thinking. I didn't want to say it, because it could probably rile some people, especially if you're Canadian, right? Maybe. But yeah, I think that is going to be a way ahead for the United States to basically acquire Alberta, or at least some interest in Alberta, right? Because Trump was talking about, hey, Canada should just be part of the United States at this point. I think their whole GDP is less than that of like New York or something. Like it's or that less than that of California. It's wild that one state could produce so much more than a whole country. But I guess that's true for a lot of the world. But yeah, I think that is a possibility. That is, there's a probability or a world where that actually happens. Let's see. Super Stray Guy. Hey, thanks for joining. Payoff will be epic. Demarkians don't want no beef. They sent those 17. I wish I could play it on the stream, but I'm pretty sure I'll get a copyright strike. But you guys know that the scene from Inglourious Bastards where, they're trying to speak Italian, right? They're at that movie premiere and they're trying to speak Italian. And, that the German guy, the German guy is one of the main characters. He starts laughing hysterically. And it's like, when NATO sends like 17 troops to Greenland to defend against the United States, and it's just him laughing hysterically. Like it's kind of true. Like you think this small, but they're doing it so that the United States doesn't do anything first, right? We've done it in the past. The United States, what they'll do is they'll plug in a couple of troops. They'll sprinkle them in all over the place, right? All it is a deterrent. That's it. It's a deterrent. It's a very low level deterrent. It's basically to say, hey, if you attack any of our troops, right, we're going to have to act, right? The United States did that several times, especially in the Middle East. They've done that. So let's see. Denmark is going to get statehood before Washington, D.C. Yeah, probably, man. They should just, well, I'm not going to say they should do anything. I'm sure it's pretty crazy. Oh, thanks for the $1 Super Straight Guy. I appreciate that, man. I appreciate that. Let me give you, there we go. Hell yeah. I'm going to buy more. I'm going to buy one share. Well, I used to be able to buy one share of Ulti. Now I can't buy anything with $1. That's going to go towards a metal mining ETF. Anyone want to hop in the chat? Not the chat, but like the actual voice chat. I don't think I've ever tried this. Let me see. So it looks like my mic is working in voice chat. Retire on dividends. What's up? Yeah, it's starting to look that way. Let's see if. Well, it looks like S&P futures are up. It looks like we're okay. It looks like the market did open like really, really bad though. I don't know if this is going to update. Yeah, we're down 1%. So I mean, that's kind of a big deal, but not so much of a big deal. But yeah. We'll see. We'll see. I think this Greenland stuff is really going to start to take shape this week for sure. I think that's what's going to be causing the sell off or anything. It depends on how Trump. You just need to stay the hell off X or True Social, whatever. Just take the damn phone away. But we'll see what happens because I think that is going to be one of the major catalysts this week. That and the Supreme Court, right? SCOTUS is still kind of determining what's going to happen with the tariffs. And look, right now, breaking news. Denmark sends additional troops to Greenland. Let's take a look. Let's take a look and see what that's all about. All right, Denmark has deployed additional military forces to Greenland after President Donald Trump refused to rule out using force, oh God, to seize control of the Arctic island. Oh God, man. So they sent 200 more troops. Oh my God. Guys, you can't make this shit up. You can't make this shit up. Oh my God, you just cannot make. Yeah, we're going to have a hell of a week. We're going to have a hell of a week. All right. We're going to have a hell of a week when market actually opens up. We could probably get a huge dump. Let's check. Look, is the VIX? What's the VIX doing? The VIX got to be doing something. All right. 18. All right. So earlier in the day, or I guess week, it was like 19. It was at like 19 and change. So it looks like it came down a bit. We'll see what happens. But yeah, just for context, and I posted this in the Discord, but just for context, was it November when we had the huge, or no, October when we had the huge sell-off? Yeah, October 10th, the VIX was at 21.66. Then 25 or then 25.31 on October 16th, and that's when the S&P had a huge drawdown to about 5%, right? Then November 12th to 20th, the VIX was at 20 to 27, right? And that was another 5% correction, right? So we'll see, man. We're getting close. We're getting pretty close. Let me see. I'm over here just talking and not even sharing the screen. God, I'm a horrible host. G bro, what's up? Yeah, so VIX is up 18.84 right now. Right? And man, I didn't even show you guys the damn the breaking news. Oh, I'm a terrible. Here we go. Denmark. Here we go. Denmark. There we go. Sorry, guys. I just learned how to use a computer today. All right. So Denmark has deployed additional military forces, 200 troops, after Trump refused to rule out using force. Oh, my God, man. I got to say, you can't make this shit up. This is exactly how 25 started, guys. You remember, first it was Mexico, right? We're going to put tariffs on Mexico. Then it was China, then it was Canada, China, and Mexico. And then the next thing we know, it was the whole world, and the freaking markets just tanked, right? So maybe it starts out this way, right? Maybe we don't use force. Maybe then we use force, and then you know what? Maybe we just break away from NATO, right? And then, oh my God, that will send the markets going. That'll send them down. But interesting point. Let's check out what gold is doing, because when there's a lot of geopolitics shit happening, right? A lot of crap happening. Usually gold does very well, right? Let's see if gold is up. Let's see if we can get some gold up in here. Silver, we already know, is doing really well. Silver is always doing well. All right, so it doesn't look well. Maybe it's because it's not open yet. Let's see if it's open in the pre-market. There we go. Let's see. Robinhood. Oh, snap. Here we go. 2% on gold. 2% up into the green on gold. right? Just off of this news. Hey, those of you in gold, man, are sitting pretty, I'm sure. Let's check out what GDX is doing, because I do hold a little bit of GDX, and I'm always excited to see this. Shiz. Oh, my God. Yep, here we go. I bet you, and this is obviously, I don't know if, let's see if Dixie is down. So the dollar index. Let's see if this will show. No, I don't think it'll show because it's not up right now on Seeking Alpha. Maybe TradingView might have a live. Let's see. Let's see. Oh, there we go. You had a nice little drop. Nothing. It doesn't look like anything extravagant, but it looks like a nice drop nonetheless. So yeah, it's just, hey, I tell you, man, just anything happening in the broader world just affects freaking the stock market, geopolitics. Here we go. Just buckle in, guys. You know, buckle in, because it's going to get interesting. G-Bro says, let's go. Super Straight Guy says, off topic, what the hell happened to Maggie? $51 to 47. Roundhill's ready to get a rude awakening. GDXU 374. The leverage play. Real Evil Duck says, time to roll my calls. So, I don't know. Let's take a look at Maggie. Why not? Let's take a look. Well, I mean, when you look at Maggie, right? When you look at Maggie, oh my God, 3% down. Ooh. Well, yeah, that's because the S&P 500 is down a whole percent. So this holds the Mag 7. So yeah, that tracks. GDX and SLV, let's go. Let's check out SIL. We'll come back to the Maggies thing in a second. Let's see what silver's doing, or silver miners. Well, let's go. 8% overnight. Let's go. Oh my God, that is crazy. Damn, let's go. I wish I bought more. Man, I wish I bought more. I'm telling you guys, geopolitics, man, shit's playing, it's going to be the catalyst. I think it's going to be that thing that's going to drop the whole market. It really depends what we do with Greenland. Man, that is freaking crazy. Let's go. Okay. Let's see. Let's go back to Maggie real quick. All right. We're going to do some Maggie stuff. Let's see. So Maggie's down 3%, right? What is Mags at? I mean, we just have to really look at, come on. Let's see. So 1 week, whoops, we're not even looking at Maggie. Retire on dividends. I don't know if you caught most of the stream, but yeah, I was going over the whole metals market and just going over kind of what's happening in the broader scope of things. Covering how much. Well, Greenland has like 36 million tons. It's one of the second most concentrated places of rare earth metals in the world after China, and China has most of it, right? So that's why it's a national security thing for the United States. They have to get it, right? Because they want to kind of wean off of using China for so much stuff. But anyways, let's see. So I think my mouse is dying. All right, so we have Maggie. So Maggie's down what? Over the last, you said 47, 51 to 47. Yeah, that doesn't look inspiring at all. That's what happens. I mean, you got the cover call payouts, that's just what income ETFs kind of do. But let's take a look at MAGS, which is just a MAG 7 ETF. No cover calls, nothing. It's a vanilla index. This is down obviously because the S&P 500 is down. But if we look at the 1 month, down 3.68%. So there you go, right? It's just the MAGs, the MAG companies are doing bad right now. They're not in a good spot, right? And of course they're not. I mean, look at what's been going on. There's been a huge rotation out of large cap, a lot of fear, doom and gloom, kind of going back, into December. People look like they're just getting ready for this big one, right? This big sell-off, at least I think. There you go, Skeptic, again with these really freaking obscure ETFs. All right, so we have Tuttle Capital Management 7 Income ETF Blast. You degenerates in your leverage. Okay, so let's look at the 1 month. Has this been out that long? No, this hasn't. Well, yeah, this hasn't even been out that long. So there you go. All right, that's what leverage does to you. Tell me, I'm speaking from experience, but I mean, there you go. Like it's not really doing that well either. And that's because the mag 7 are just doing bad. If anyone wants to join, or anyone in the Discord wants to join the chat, I'm in the chat. We could bring you on, get you on the live stream if you want to talk about anything. So I just want to put that out. Eventually, I'm going to get StreamYard, so then I could just put a link. I could put a link out to the put a link out, and then people can join. So I put out a poll last time, and I totally forgot to cover the poll, but people were talking about, or I put out the poll. It was like, should I start including guests on going forward? So 64% said yeah. I think 11% said they didn't care. So I'm going to start doing live streams. I don't know. I mean, it really depends who's available, who wants to come on. I mean, I am streaming at kind of like a really, weird time, 8 p.m. Most people are like sitting down, having dinner with their families or whatever, or watching Netflix, right? If you're like me, I'm usually probably streaming something, right? Streaming news or something. But yeah, so I'm going to start doing that next as soon as I can get the StreamYard stuff figured out and kind of like set up. But I think that'd be really cool. We could have investors come on, or just, regular everyday investors come on and kind of just talk. But I think it'd also be cool for any, like, if I can find like other YouTubers to come on and kind of like talk about what's going on with them. So that would give them obviously some exposure. Not quite like interviews, just come on, sit, chat, let's talk about what's happening. I would like for this channel to eventually become like, kind of more of a live base. Honestly, I am still undecided what I even want to do with this channel, because again, the high yield stuff, as interesting and fun as it is, it's starting to just become kind of blase blah for me. Like every new week, it's a brand new ETF, and there's 100 videos that cover the ETF, the high yield stuff. Everyone's looking for that elusive one ETF that will just, 100% yield, no NAV erosion, for life, right? I am not there. I'm just kind of over that kind of stuff. Not that I don't find it interesting or valuable, but I'm just personally kind of over that stuff. So I want to move this channel towards more of like, kind of like a generalized investing channel, right? We can cover high growth, we can cover dividends, we can cover high yield, we can cover, just, basic stuff, market news, macro market news, that kind of stuff. Let's see. Dividend Sith says, Mago does not pay. Load up on Maggie. When will they add AVGO to the Mag 7? So interesting thing. I did see some chatter about, what was it, MGTN, the Mag 10. So MGTN is a index. I forget who makes it. Is it CBOE? I think it's CBOE or MSCI, but they came out with a Mag 10 index, and basically they added AVGO, Palantir, and I always forget the last one. Maybe it's AMD. But they add these three other companies to create the Mag 10, right? So we'll see if any new ETFs come out for that. They're not going to add AVGO to like a Mag 7 ETF because it's the Mag 7, right? Unless one of those Mag 7 companies lose their market cap and go down, and then AVGO takes over. I could see maybe a world where that might happen. But yeah, I don't think they're going to. I don't think they're just going to add it, because they got to keep it Mag 7, right? Screeching Possum says Maggie's back at launch price. It looks like it is. It looks like it. Oh my God, it's just getting worse and worse. Let's see. Inception. I don't know. We could do 1 year. Let's see what Robinhood has it at. So it launched at like $50. So it's basically at $50. Screeching Possum says MSTR. Super Straight Guy says, just talk, be normal. The channel can discuss market stuff. Anything is, Eugene, you're not a common person. I appreciate that. I really do, Super Straight Guy. I love the name, dude. Super Straight Guy. Anyways, MSTR. Let's cover MSTR. Oh, let's cover MSTR. Speaking, it just clicked with me. Vanguard MSTR. Guess who just bought a ton of MSTR? Okay, MSTR. Vanguard just bought. Let's see, was it $500 million worth of MSTR? Let's see. It's not any of these. 500 million. Let's see. No, we don't want the holdings. We just. Yeah, there we go. There we go. Vanguard buys $505 million MSTR stock as price hits at reversal. So we kind of covered this a little bit in previous streams, probably previous videos, where MSTR was basically entering this like wall of resistance, right? It wasn't going to go below 150, right? It was just a wall of resistance. That's probably where a lot of, the passive inflows had come in, a lot of the institutional money. So keeping that in mind, right? If you were to get in at 150, I mean, you had a pretty nice little jump, right? Up to 179. I am kind of, if I didn't have such a freaking heavy allocation already to MSTW, I would be buying MSTR absolutely 100%. I was talking again with Gary Gill. He has his own YouTube channel. Recommend you guys check him out. Really good content over there. But I was talking with him, and I'm like so bullish on MSTR that I would buy at these levels. Absolutely, I would buy. And the reason is because the upside is there's a lot of upside for this, right? Potentially, if you're a believer in MSTR, right? If you have conviction in MSTR, because for me, the conviction for MSTR comes from a couple of things. One, all the Bitcoin they hold. Two, they destroy the bears. They destroy the bear case, right? One of the bear cases out there was that they were going to lose money because they're paying so much dividend on Stretch, Stride, Strike, and Strife. They're paying all this money, all this dividend income to those unit holders, right? So where's the money coming from, right? And then not only that, they were saying that they're going to have to liquidate their Bitcoin holdings. So what does MSTR do? Well, let's just hit that ATM button, cash out $2 billion, and now we can cover the dividend for the next year and a half, 2 years or something like that. So they just destroyed that whole case. They can weather a Bitcoin winter, right? They could weather that whole storm if it was to happen. So that's a good thing, right? That's a huge thing. And then not only that, the case for a treasury company, right? They hold the most Bitcoin. If Bitcoin is to reach new highs and MSTR's price is to follow, right? Saylor always says is that MSTR common stock is a play on leverage, right? It's a leveraged Bitcoin proxy. That's all it is. And the reason why it's a leveraged Bitcoin proxy is because they're taking your money, right? When you invest in MSTR common stock, they take your money to go buy Bitcoin, i.e., and you're doing this with a bunch of other people, right? Obviously, other MSTR holders. So that is the leverage piece, right? And you guys can see, I mean, I guess I can pull up a chart real quick. Let me pull up a chart. Comparison chart. Let's see. Comparisons. We got I can't do it here. Let's see. MSTR. I'm going to get back to that thought because there's a lot of FUD for MSTR, and there's a lot of bears out there. Saylor's a scam artist. It's a Ponzi scheme. He's a con artist. All this stuff. How does that get destroyed? Simple. The Bitcoin is not held by Michael Saylor, which is one of the dumbest things ever, right? It's not held directly by him or by the CEO of MicroStrategy. I forget his first name, Phong Pham. It's not held by him either. It's held the same way BM&R holds it. They have several custodians that have, all that stuff. So there's several industry custodians out there. They hold their Bitcoin, and there's probably a diversification strategy. They probably have a couple different, not only wallets, they probably have several different wallets, but they probably also have several different custodians, right? To kind of minimize that risk. At least that's what I would think. I thought I heard that, it was either Lee or Saylor that had hinted at that there is multiple custodians. So even if somebody tried to, shake Saylor or Tom Lee down for the keys, they're not going to have them, right? So none of the management team also has these keys memorized, right? Because there's so many. So again, when it comes to just destroying the bear case, that's kind of my thoughts on it. That's kind of what I go with, and why I'm still bullish. I even thought, and it's crazy and probably really stupid, I thought of buying some MSTU at these levels, at the like 150, 55 level. I wish I pulled the trigger, because I'm like irresponsibly long on MSTR, right? That's just it. I'm irresponsibly long on MSTR. This would be more or less probably a swing trade, but I'm trying to be a little more disciplined because last year I screwed up a lot. I'm trying to be a little more disciplined and not buy swing trades. All right, not buy swing trades at all this year. I don't think it'll work, because it's like gambling, right? You start getting that itch. Anyways, let's put BTC. And I mean, I'm sure you guys have seen this chart probably 100-fold, probably 100 times. But if we look at the 5-year, right, leveraged play, right? This is a leveraged play on Bitcoin. So if Bitcoin has another monster rally, could MSTR, is there a world where MSTR starts to have that crazy rally back up? I don't know. Are we going to enter this, crazy Bitcoin winter? Is the 4-year cycle still intact? Is it not intact? All of this plays into a part or a piece of what, goes for MSTR's, story. But the other thing, if you're a believer in Bitcoin, then you have to believe that MSTR is going to be one of the most valuable companies in the world, far surpassing probably NVIDIA, right? Which is a crazy thing to say, but because of how much Bitcoin they hold and how much Bitcoin they have, MSTR would actually be more valuable if, on their, when it comes to balance sheet, right? When it comes to balance sheet and the assets they hold, i.e. Bitcoin. Oh my God. Skeptic says, Adam is proud of your dedication. Man, I can't do it. Adam, don't miss. All right. We're talking about Adam Livingston. Yeah, we're talking about Adam Livingston, the Bitcoin wizard. Let me pull up his channel. Yeah, Adam Livingston, the Bitcoin wizard. Dude, his insults are so good, man. His stuff is so good. Let me see if I can find some of his tweets. Or not his tweets. Yeah, his tweets, I guess, his X posts. Adam Livingston. Yeah, here he is. Bro, his insults are just chef kiss, man. Like he's so good at insulting people. Like it's really, really good. Super Straight Guy says almost all of their holdings were bought. Vanguard something. Yes. Yeah. All right. So yeah, Vanguard probably does know something we don't. Obviously they hit that wall of resistance, right? Sellers couldn't sell anymore. Or short sellers couldn't continue short selling, I suppose. So yeah, I mean, maybe MSTR just continues pumping higher from here, right? We hit the lows of the low. I mean, MSTR common stock lost, I think it was like 60 or 70%, right? 60 or not Misty. Strategy. There we go. I think, yeah, it lost like 60% of its value. There you go. I mean, there you go. It's a pretty significant dip, right? People are saying it's going to go to zero. I don't know about that. I don't know if that was true. Let's see. Dividend Sith says, how do you feel about the 4 MST funds that pay dividends? So you're referencing MST. I guess we could cover some Defiance right here. But yes, there was some news that Defiance is actually going to be delisting a couple of their funds. All right, I'll come back to that MSTR fund thing question in a second. But I got to pull this up because it is, I mean, it's not a huge deal per se, especially if you don't invest in these funds. It is a big deal if you did invest in these funds. But it does beg the question. Why these ones in particular? I haven't had a chance. I wanted to look at what their AUMs were because their AUMs will give you a telling sign why they're delisting them, right? But it defines ETFs are getting rid of these, i.e. title. Jay. Yeah, but yeah, yes, Defiance is getting rid of these funds. And people just have time to get out of them, right? It's not, they're going to liquidate everybody, I think by the end of the month, January 2026. January 26, 2026. So going back to the whole, the four MSTR linked ETFs, income ETFs, you have MST, which I'm surprised is not listed on here, right? Because they already reverse split MST. So I'm actually really surprised that one is not a part of this list. But again, I think it comes down to AUM, how much they actually have, right? How much these ETFs are holding. Because if those other ETFs weren't actually making them any money, then that would make sense. But anyways, oh, you're talking about, oh, okay. I got you. Okay. Farudalines, hey, welcome. Hope you're doing well in Florida. I know the weather is nice out there this time of year, so that's awesome. So Dividend Sith is talking about Stride, Strike, Strife, and those. I don't know if I have like a real preference for them. I know, was it Income Architect likes Stride because it has the characteristics of a bond. I have not invested in any of these, so I just know them. Like I know the surface level, like what they are. I mean, it looks like this one's doing pretty well. It's not as crazy of a swing as some of their, some of the common stock. And that's kind of the whole point with, MSTR / Michael Saylor. The whole reason for these perpetuals is that they offer something different. And there's a whole presentation out there. I really recommend you look at the earnings video that they do, and they go over the reason why someone would invest in these things. Like Stride, if I'm not mistaken, is a bond equivalent, right? So if you want like a money market account, that's probably more true. If you want like a money market account risk, right, with a 10% yield versus whatever the going rate is for the federal funds rate, which is like what, 3.25%, 4, then you can look at Stride. And what Stride does is they strip away all of the volatility, right? So Michael Saylor says the reason for the perpetuals is that they're stripping away one thing or the other, right? They're stripping away the volatility, stripping away the risk. So they're coming out these instruments that pay just a steady, whatever the dividend rate is, right? And I think it might be Strife. That's the junk bond. I think it's Strife. That's the junk bond. Strike was their first one that they came out with. I don't know which, where that sits on the stack, but he even related like this to like purchasing real estate. So if people want to like invest in real estate, but they don't want the risk, right? And you want something that's backed by Bitcoin, well, you can look at one of their perpetuals, right? Maybe it was Strike, right? But it has the characteristics, supposedly, right? It has the characteristics of whatever asset that they're trying to replace. Right, so they're trying to replace several different, junk bonds, money markets. Man, I forget them all. Like it's a couple of different ones. But yeah, I mean, if you want something backed by Bitcoin, right, collateral. If you don't think MicroStrategy is gonna go anywhere, right, as far as like go to zero. These might make sense for someone, right? They might make sense for someone. I don't hold anything. I don't hold any of the perpetuals. Just listening to kind of, what's out there on YouTube and X, I think they're smart investments. Not smart investments. Let me take that back. I think they're smart instruments, right? Depending on the investor, depending on what the investor is looking for. Some of these pay really good yields, right? Really good yields. You couldn't find this yield with just common shares of stock. Even in the mREIT sector, the mortgage REIT sector, you couldn't find something that's relatively safe compared to, a Stride, right? 10% yield. Plus I think with Stride, they classify the dividend as ROC, as return of capital. Oh, you're only getting paid your money back. Oh my God, right? But that's what they classify it as. So in terms of like a tax classification for those who are tax aware, that could be very lucrative, right? That could be extremely lucrative. You wouldn't have to pay. Your cost basis comes down, get it to zero, right? You own the shares. It stays flat, or at least it grows a little bit. That's the whole idea. Its inception price was, let's see, I guess $90. So it's down 11% for the year. Not good. Hopefully it comes back. I know a lot of people were pissed right when it went down to the 65. But this is, I think, him hitting the ATM on these preferred shares. He ended up taking about like I think $2 billion in total from the preferreds. So, to buy more Bitcoin, right? That's the whole point, is to use the money from the preferreds to buy more Bitcoin. So you have to be comfortable with that. You have to understand what these instruments are, when they have these crazy drops, what's actually happening in the background. That was the problem with like msty, for example. msty, MSTW, MST doesn't matter, because as MSTR was dropping, right, and they're Saylor's hitting that damn button, that freaking ATM button. He's just clicking it every single week. The stock price is dropping because he's diluting it more, right? He's diluting it even more. When that happens and the stock drops, even if there's good news and you hit the ATM button, well, guess what happens to those ETFs? The cover call ETFs, the leverage ETFs, all that stuff. That stuff goes down with it. Right. So on top of the income ETFs, msty, mstw, imst from Bitwise, on top of them continuing to pay out money, distributions, that's just dropping the price of the shares even more. Right. So it's like there's nothing good from this. If you're worried about NAV, if you're worried about share price appreciation, there was nothing good about those at that time. Right. So me personally, what I'm banking on, because again, I own a sizable portion to MSTW. What I'm banking on is this move for this move for MSTR to move to the upside, to have this crazy run up when Bitcoin has its run up, and if and when the environment turns risk on again, right? So yeah, MSII, MSTK, yeah, all of them. There's so many freaking MSTR linked ETFs, income ETFs. I can't keep up with all of them. Like when MST came out, a ton of people jumped in thinking like, oh, this thing is going to continue going up, 200% leverage to the upside. No one ever thought about downside risk, right? And I mean, and again, people were like, oh, Defiance sucks. I'm like, no, that's not how this works, guys. It's the underlier. MSTR is going down. Ergo, the freaking ETF is going down. Okay. Well, yieldmax sucks. Well, that aside, I mean, again, the ETF is going down because MST is going down. But yeah, MST, I mean, look at that chart. It does not inspire confidence, right? It does not exactly inspire confidence. I didn't even realize it had an inception date of $80. That can't be right. Is it? Damn. So it came out at like $80 or something a share? That can't be right. No. That is wild. Screeching possum, man. Which ones did you hold? Be honest. We're all friends here. We're all friends here. Let's be honest. Oh, its AUM is 21 million. Oh, it's barely getting by. It's barely getting by. AUM of 21 million. Yeah, that's what is the other one? AMD. What was it? AMD from AMDD. Is it AMDD? What's the income? We just covered it. Damn it. AMDU. That's the one I want. AMDU. Misty did a reverse split, so it screws these sharp ups. Yeah, I mean, the reverse split, I mean, I personally don't really care about reverse splits. I get that there's this notion out there that the fund managers are just trying to make their funds look better, et cetera, the share price, yada, yada, yada. But at the end of the day, I mean, when you really look at it from a technical perspective, like what actually happens and what it's meant to do, it's like whatever. When you YOLO your money into these cover call funds, you have to expect a reverse split. Now, could they reverse split infinity? Absolutely not. I don't even know like what the regulations are for cover call ETFs. So if they issue like, let's say a hypothetical 10 million shares, right? And they're paying you out those 100% yields. Everyone's excited, euphoric, but the share price keeps going down. And then they reverse split, a 2-for-1 or whatever. And it goes down to, 5 million shares. And then they just reverse split it down to 2.5 million shares. Like, when they keep reverse splitting, is it infinite? Like, is that what they just keep doing? I have no idea. But it's an interesting question because it's like, how long would these funds realistically be around then? Is, for yieldmax or NEOs or, well, maybe not NEOs, but yieldmax single ticker cover call funds, right? How long would they realistically be around if they just keep getting reverse split? So would they just reverse split down to the bare minimum and then just delist a fund and then relist it with a new fresh 25 million shares? I have no idea. But it's something that I kind of thought about. Tradesman, hey, welcome, man. Hit that like. Hey, I appreciate it. So anyways, going back to this, yes, let's look at why it's being delisted. $5 million in AUM. So yeah, we were talking about this earlier. That Defiance is delisting these funds here. So MST has 21 million. So it's a money maker, right? They're making money off the expense ratio. I don't know how much it costs them to run this fund, Defiance, that is. But if they're delisting it, it's probably due to, just investor interest. Investor interest is not there. These were more or less trading vehicles, right? Just like their leverage funds, their regular leverage funds. These were trading vehicles. Let's see, 2 million AUM. See, that one's definitely not attractive whatsoever. When they came out with the HIMS income ETF, I was like, what? This is like the O'Reilly's 2X ETF that Skeptic had put down. O'Reilly's has a 2X ETF, which is ridiculous. 3 million. Yeah. See, MST by itself is probably more than all those funds. That's why they are not delisting this one. It's either $21 million worth of bag holders, or it's actually like people are getting, like, there's fresh inflows for MST. So it's interesting is all. Very, very interesting. Do ICO ETF. All right, let's take a look. Well, yeah, this is Coinbase. I mean, it's going down pretty much because of the crypto market, right? I already know it's down. Yeah. It's because of the crypto market. You guys can see here, but again, Bitwise, you have to take a look at their distributions and how much they're paying, because that would also have a part to play in all of this. Again, the cover call ETF stuff, you have to kind of go in knowing that this stuff is going to erode to zero, right? Not erode to zero, but it's going to erode to the point where they're going to reverse split it. But let's see how much AUM is in this thing. So close to 30 million AUM. So this is a moneymaker for Bitwise. So they'll probably just reverse split it. That's really it. They're just going to reverse split it, bring it back up, and then just, again, continue writing it down. Because the reason why these ETF managers have to do these reverse splits is because if they don't, and these ETFs start ending up at like $1 or like $2, exchanges don't like that, right? Exchanges do not like that. So what they end up doing is delisting these ETFs. So they don't want that to happen. So that is the reason why these companies, these fund managers, are forced to reverse split to bring that price back up. Now, of course, retail being retail, they're just hiding their track record. It's bad. They're just lying to us. Or, it's not $50 a share. Well, no duh, dingus. Like that, no duh. Like, obviously, that is the case. That is a fact that they have to do this, right? They're not trying to scam the audience or the investors. If the investor is doing proper due diligence, which, by and large, most investors kind of just skim the charts. But by and large, if investors are doing their due diligence, understand the strategy of the ETF and understand what it's trying to do and what it's supposed to do, then that a reverse split is inevitable, for the most part. It is going to happen. Now, crazy bull markets help. All right. Crazy bull markets help. That quote's coming from Jay Petrocelli. I watched the interview. Everyone's like, Alti is, the NAV is stable. The NAV is stable. And he kept saying it. Well, a bull run helps, right? Doesn't mean that the ETF is doing well or that they stabilize the NAV. It just meant that the bull market helped, right? For the underlyings. And now we know the story with Alti, where it just kept going down, 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 and down, even though the S&P 500 was continuing to go up and up and up, right? That 80% distribution rate really, really played a part in all of that. Plus, their picks and everything else. And now, they have the new strategies where they're including the MAG 7 in the ETF, right? To help stabilize the NAV. I don't know, guys. Me personally, I'm not an Alti holder. I had like $800 in it at one point. A lot of people FOMO'd into this thing and just lost a ton of money. But again, understanding what it's supposed to do. It's supposed to pay out a crazy amount of distribution yield. It's not going to stay stable. At least I don't think so. And it's just going to continue trending down, right? This right here. This is when Alti got like $4 billion of inflows. $4 billion on an ETF of inflows, on a freaking cover call ETF, whatever you want to call this, income ETF. And then just after that, it just kept dropping and dropping. And then all the FUD came out, all the videos came out. Oh, Alti is bad. Oh, they're not stabilizing the NAV. Oh, this and that. And the sky is falling. And there it is right here, right? It's just, that is what it, that inevitably that's what it does. You can't maintain an 80% distribution yield and expect that to keep the freaking NAV or share price stable. Like, again, everyone's looking for that golden goose ETF where it's 100% upside, no NAV erosion, 100% yield. And again, maybe that ETF exists somewhere. I don't think it's going to exist anytime soon. Let's see. So we have Screeching Possum saying, Grok says msty launched at $20 a share. So if true, that 1 to 5 reverse split making it look like $80 is nuts. That is pretty crazy. That is pretty crazy. And again, I question how many more times can these reverse split before something happens, right? Again, the whole point of yieldmax is to maximize your yield. Their literal name is what they do. And people had this like shocked Pikachu face when their NAVs were going down and wasting to zero, right? Now, Retire on Dividends did some really good because he used to cover the trades, right? Now, he would call them out and say, yes, they screwed up on more trades than not, right? They screwed up on more trades, and yet they were still paying out this crazy distribution, right? So where are they getting that distribution from, right? I don't know. I mean, in my opinion, again, I don't do that much due diligence on the yieldmax trades or funds. I mean, I don't have the capacity for it. But, if they're going to have to pillage the money from somewhere, right? Where are they going to get the money from? So, and that's not a knock at yieldmax. That's not a knock on their trades or anything. It's just a fact, right? It's just what happens. Not every cover call is going to be a winner, right? But they're forced to always do trades. They're forced to do that and always pay out a distribution. So again, their traders are like always constantly churning these things. Win, lose, they don't care. They just have to do trades, make some type of money. So R14 Real says majorly bullish on the tokenization announcement. I already invested into DeFi, so this just makes crypto even more bullish. Are you referencing the what we covered earlier? The New York Stock Exchange tokenizing in the future for 24/7 trading. If that's what you're referencing, I mean, yeah, I hold BMNR, right? It's a proxy play on Ethereum. So the New York Stock Exchange didn't reveal what, blockchain that they're doing it off of. So it would be really interesting to see if they announce it's an Ethereum blockchain. Again, that would just be very bullish for Ethereum. Oh, okay. All right, cool. Screeching Possum says, I don't know why these charts show $80, Padre, because msty was under $10 before the split. Yeah, it's because of the split. That's why they show $80 now. So they show the new price. But of course, investors who've been around the block will remember, right? Investors who've been around the block the whole time will remember what msty was, initially, right? Like, we know it launched at $20. Let's see. 5 years, I guess. So we know it launched at $20, right? But because of the split, now it shows $100, right? And then there's obviously the crazy run up. But it's the new investors who get into this stuff that will probably have a foggy lens, right? They won't know the full story. It'll be as clear as mud if they don't understand reverse splits and they just believe that this thing pays out 100% yield every single week, right? So it's those investors that will probably get a rude awakening if it was if they were to buy into this. But look, looks like the NAV is stable, right? Really, MSTR is just trading flat, at least flat for now. Crazy times, guys. Absolutely crazy times. Damn. Well, I mean, we're going on an hour. I mean, what do you come on, guys, keep them coming. You guys got anything else for me? Again, I still think this is the biggest bullish thing, is Vanguard buying, up more MSTR shares. That to me is a big deal. That to me is a huge, huge deal. So 14 Real says, doing a major portfolio overhaul tomorrow, starting my NEOS curve and metal ETF focused. Man, yeah, we were just talking about all this stuff about metals, all this stuff. We covered DMAT earlier. We're talking about disruptive materials. I don't own a position in this, just so you know. Speaking of metals, let's take a look at, let's go back here. Let's see how gold is doing real quick. All right, still up, almost 2%. Silver had the craziest move up. Crazy, dude, look at that. It's a crazy move. Absolutely crazy move up. 8%. Let me see if I can share this with you guys. If I can find it. Because like I mentioned in some of my previous videos, I'm starting to use a lot more AI just for guardrails for me personally, because I do a lot of stupid stuff, especially when it comes to purchasing. Like I'd be always buying the dip when I shouldn't have been buying. I'd always be adding new positions when I shouldn't have been adding, or that served literally no purpose in a portfolio. So I built these GPTs to basically keep me like focused, right? So I don't always get this shiny object syndrome. But I have this one GPT that does, it's not going to do like it does list buy and sell, right? It does list it, but you have to take those with a grain of salt. And it's usually lists them only because there's certain like triggers, right? Cause there's like 100 inputs that go into these things. So this is it right here. I hope you guys can see it. There it is right there. Boom. Scroll that. Okay. Whoop, whoop. Damn it. Hold up. Okay. So looking at this, right? It said silver was going to have a parabolic move. Parabolic risk remains elevated, right? It gave me a hold. This is a few days ago, so this isn't like a fresh one, but this is a few days, right? So I was like curious, like, what does that parabolic risk mean, right? So I was Googling, just working with the GPT, Googling it. Basically, we know parabolic means up, right? But I wanted to know from a GPT's perspective, what does that parabolic risk mean, right? And it kind of laid it out for me. And it looks like this jump is what that is. Now, is this probably going to come back down to earth? It looks like it's starting to come back down to earth. Probably. That's probably something that could happen. But still, it is pretty crazy that is happening for silver. Super Straight Guy says, I just looked at BM&R. Inception price $7 is bananas. Well, yeah, BM&R before it was BM&R as we know it today was just like a mining company, right? A crypto mining company. And then Tom Lee partnered with them as a chairman, and then they got focused on Ethereum and becoming a DAT, right? An Ethereum treasury, a digital asset treasury. But, as we covered in the last stream, I think it was the last stream, we're talking basically about BM&R's, whatever presentation. They're doing they have 4 pillars of growth. They have 4 pillars of growth. One is the moonshots. The other one is, their Maven project. 3 is working with like partners, the community, that kind of stuff. And their 4th one was, I forget the 4th one. But anyways, let's take a look at Ethereum. What is Ethereum doing? Going back, let's see. So R14 Real says SLVO, GLDI, KSILV, KGold are what I'm looking at. A lot of people have been really happy with the curve funds. They've been really happy with the curve funds. Now this is funny because it's funny like how everything comes full circle, because nobody was screwing with curve, right? Nobody was screwing with curve. Everyone wanted the yield maxes, the roundhills, everyone else, right? But nobody wanted to touch curve because their yields were so low. And now there's this, you could see it, this like on YouTube, everyone likes Neos and Curve now because of how safe and stable the NAV is, the yield and all that stuff. They're not going to erode your money, but they've always been good, right? They've always been good. Tap Alpha has come out now with their funds. They've been doing really well. So again, it's just really, really funny, like how everyone's kind of rotating, and like retail investor psychology is rotating from super high yields to like more safer, stable stuff. Because Curve has always been good. They've always been good. Their ETFs has always been focused on capital appreciation, income generation, right? With real capital appreciation, not fake stuff, where the NAV just keeps going down, right? And it's just nobody wanted them because they didn't have super high yields, and now all of a sudden they're attractive. Citizen of the Year, oh God, man. High yield dividend warriors most wanted. They got a hit on this guy. How will this impact Greenland's legacy? Man, that's true. That's the question we should all be asking. Anyways, I forgot what I was talking about. Ethereum. Yeah, it looks like Ethereum's doing Ethereum stuff, whatever that is. So R14 Real says, yeah, I maxed out into Roundhill, but owning KYLD and KQQQ has me sold on shifting my funds. That's good. Let's see, if you were starting all over tomorrow. So this is from Comic Book. I recognize the profile pic. So I've seen your comments before. So welcome. If you were starting all over tomorrow, what would be the 5 ETFs you would dollar cost average to long term, knowing what you know now? Man, that is a great question. That is a really good question. If I could start all over, and if I was to really focus on themes, let's see. This is gonna be kind of hard because I have to keep income ETFs in mind. Assuming I didn't have to worry so much about income ETFs, I would probably structure my portfolio this way, right? I would start with a broad-based index. I know that's so vanilla, so like duh, right? But for the first one, I would stick with probably VGT. 100% I would stick with VGT because again, I am of the believer of this whole AI story playing out over the next decade, right? Easily the next 4 years and well into the future. So this would be, of course, one of my cornerstones in the portfolio. Another one, because I'm a big believer in Bitcoin, but not to the point where I'm a Bitcoin maxi, or it's going to replace the dollar, as a world reserve currency. But I am a believer in Bitcoin in terms of like store of value, that kind of stuff. And it's like a hedge against fiat currency, part of the debasement trade. So I'm a believer in Bitcoin in that perspective. So I would hold IBIT, right, for my Bitcoin exposure. Let's see. So that's 2 funds. I would definitely include some type of gold, right? Now that we're all about gold, we're all talking about metals and stuff like that. Shout out to you, Padre, in the chat, and Evil Duck. Appreciate you guys always. But gold is now all the rage. So I would definitely include gold. Now that I understand, why metals is so damn important, I would definitely include gold in there, right? So now we covered AI. We have the debasement trade, and we have a very high convex asset, i.e. Bitcoin, that could potentially be some type of inflation hedge or a bet against fiat currency. So we have 3 ETFs there. Now for an income ETF, this is where things would probably get interesting, right? So again, for those who don't know, I don't work a normal job, right? As a matter of fact, I don't work a job at all. So I'm unemployed, happily unemployed. So I live off my investment income. So I have to keep, how would I make income based off my investment, right? Off my investments. What ETF would I consider? I'm not looking for a super high yield NAV eroding ETF. So that pretty much cuts out 90% of the garbage out there. Let's say I did have a job, right? Let's say I was young and I did have a job, let's say between 30 and 40, right? So I still have about 10, 20 years till retirement. I would probably opt for a safer, probably smoother ride. I would probably go for something from Neos, like SPY. I'd probably opt for SPY or QQQQI, right? If I want to add a little more oomph, get a little more out of my income sleeve, right? So now I have growth. right? I have a hedge, gold, right? Part of the debasement trade, if you believe that stuff. I also have a high convex asset like IBIT/Bitcoin. Now I have income. So for my fourth ETF, let's see, a fourth ETF. And again, I like to play on themes. Like my style of investing is I like to play on themes on macro stories. So we kind of covered the big ones. Let's include metal, right? Let's include some type of metal play. So right now, at least for the next, I don't know, couple of years, definitely for the next couple of years while we're with the current administration, rare earth minerals, critical minerals, that's going to be a big thing. I could invest into like a broad-based metals ETF. And I'm just thinking out loud here. But I don't know how long that theme is going to play out for before it just not crashes, but before it just kind of reverts back, right? Because right now it's euphoric, right? We're in the euphoric stage. Everyone's hearing about metals. Everyone's hearing about gold and silver. Everyone's piling in. So do I need a metal sleeve out of a 5-fund portfolio? Probably not. Yeah, probably not. Like if I'm investing for the long term, probably not. I'd say probably not. I don't know, chat. You guys tell me, what do you think? What do you think a good fifth ETF would be? So right now we have VGT, we have NEOS, SPY-I or QQQI for income. We have IBIT for Bitcoin, and we have gold as a hedge, bet against the dollar, debasement trade, thing. So what else could we have to a 5-fund portfolio? I mean, this is a good question. This is a really good question. So I appreciate you asking that. Maggie. I already have NEOS QQQI as part of this hypothetical 5-fund portfolio. Eugen Probnot Vasquez, Citizen of the Year. You're not a Citizen of the Year. Why are you lying? That's a false claim. Let's see. Dividend says Goop or KQQQ. Citizen of the Year says stocks are very red to start tomorrow. Yeah, it's tomorrow. This week is going to be crazy, and it's going to be all about Greenland. It's going to be all about Greenland. Let's see. Gold, silver, platinum are a must. Yeah, 100%. Platinum. I didn't know how like valuable platinum or silver was. I didn't realize how much EVs need silver, like how much silver is in an EV car's battery. And then now they're talking about these new batteries that are coming out. And we're getting way off topic, but yeah, these new batteries are called, oh my God, I forget the name already, but basically these supercharged batteries will be able to charge in like 10 minutes flat, right? They're supposed to be like the next generation of battery technology. tsly, TDAC for the win, IDVO, iREIT. Now there's a good one. Okay. Now, well, maybe not iREIT ETF, real assets. That's what I'm looking for. We're talking about real assets. Okay. So that's a good, fifth part of the ETF, right? You can have something like real assets, which would be a mix of companies that, offer either like some type of commodity. There's ETFs that hold airports, right? They actually make money. Tolls, right? Toll road companies, things like that. Infrastructure, power infrastructure, development, all of that stuff. So yeah, probably a real assets ETF would go into this 5-fund portfolio. Now for a long term, I see this is the hard part, because it's like if you're going to hold this for the next 20, 30 years, the United States has debased our currency a couple of times, right? So like the debasement trade is real, but it's like it only, like I was researching the debasement trade. It comes in spurts, right? It comes in spurts. It'll have like a 2 or 3 year period, and then everything will just kind of like go back to normal, stabilize, equities, gold, all that stuff kind of just, do their thing. But that's after these crazy moves. But then the United States will debase their currency another way, right? They've done it 3 times in history already. One was taking the dollar off the gold standard. Another time it happened, I think in like the 1980s, if I'm not mistaken. So it's happened a couple of times. Let's see. Trust me, none of this is off topic. This just further explains why these metals are growing and what value their importance has. Absolutely. We have Dividend Rocket in the chat. Hey, welcome to the stream. Where are you now? Like, I know you travel all over Southeast Asia. You're all over the place, man. I got to get on your level. Yeah, I don't know, guys. The fifth ETF of this portfolio is interesting because I don't know what I would put. I have no idea what I would put because I've already covered kind of the larger trades, of what I think. You have an income sleeve. You have just a vanilla index, a VGT, in my opinion. You could have IBIT for your Bitcoin exposure. You could have what was the other one? Gold, a GLD for your gold exposure. So I don't know. It's whatever the fifth one is. I can't think of one right now. I would not put another income ETF in there. Personally, I would not put another one. There was a question up here. The whole movie, the good, the bad, the ugly, was about a bag of gold. Financial value 69993. Hey, welcome. I don't think I've ever seen you before, so welcome. He says, "What's your retirement age, bro? Dividend income goal?" So I don't really have a retirement age. Like I'm trying this whole thing out where I just don't want to work, and I want to just kind of I mean, there's reasons why I don't want to work. I'm not going to get into them. Right now, I'm just trying this thing where it's like, more entrepreneurial, investor focused, that type of thing. That's kind of like my phase where I'm at right now. Could I go back to a job? Probably. Who knows? If Eugene yellows his entire account into an MST play and then or MSTR play and I blow the whole account, probably be back at a job. But for right now, probably not. My dividend income goal, I'm happy with 60K. Like flat out, I'm happy with 60K. I could live off 60K, right? I could live off 60K and still go out and do fun things. As far as anything else above that is nice. I did set a goal to try to get a little higher. But of course, it all depends with the market, right? The market is going to do what the market does. You can't control the market. I remember at one point, my Snowball Analytics was telling me I was making like 300K in dividends. I knew that was a lie, right? I was like, this is not real, right? And then we had the huge pullback in October. Dividends got wiped out. I ended up selling out of some of the funds, kind of reducing my exposure. So now, I'm not even nowhere close to that. So I don't know, like some people yellow all of their money into these income funds. I think that is, especially if you're younger, I don't think that's a prudent thing to do, and ignore growth. Like I was talking about this for at least a couple months now. I did an interview with Pay Me in Dividends and with Retire on Dividends. And I basically talked about how I don't want to just be all in high yield funds. I would rather also be in growth. I don't want to ignore growth funds. So that's why I still hold some of the assets that I do. Another interesting point, because there's some YouTubers out there. They have strictly income portfolios, income-based portfolios. Some of the bigger channels out there, you have, Passive Income Investing. He does a lot of good content on this stuff too. I mean, he's a name brand in this space, right? You also have, Todd Unconventional Wealth. Now, I know some people in the chat might start taking pot shots at him, but just bear with me. Again, primarily he's in income funds, but he also does a lot of cover calls and options and all that stuff. So you can make it work, right? You can grow a portfolio that way. You can make it work. I just prefer not to. It's just something I don't want to be all in on. Now, what I liked about PII, Passive Income Investing, what I liked about his approach is that he is pretty much diversified. And I think last time I looked at him, he only had 5 or 6 ETFs. That was it. He doesn't have 15 or 20, right? He doesn't have 15 or 20 income ETFs. And he wasn't trying to get paid every single day of the week, which I thought was kind of the dumbest thing out there. But he honestly just follows a simple framework. It works for him. And, he's doing pretty well. I mean, he doesn't work. He does YouTube full time. And he gets to live, I think he's living in South America, Argentina maybe. So yeah, I mean, hey, it worked out for him. So congrats, it can work. It's just, again, something I don't want. It's not my style. Let's see. Oh yeah, but going back to my point, for the younger investor, the younger investor, let's say 20 to 30, who are buying these income funds like this, it's going to be harder to move the needle, right? It becomes really hard because you need a lot of money in these in order to generate that income, that 100K income, right? If you're young and starting out, like my honest advice is just go with a simple index. If you have no assets to name of, like you don't have rental properties, you don't have a trust fund, your dad and mom don't work at Lockheed Martin, start with an index, a simple index, SP 500, QQQ, SPY, VOO. If you want a little more something like a VGT, an XL, I forget what the other one, the Invesco ones are. I think it's XLK. I think it's XLK. But yeah, just go with a simple index. Get it up to a certain dollar amount, a certain threshold. Maybe it's 10,000, maybe it's 50, right? As a challenge, just squirrel your money there. You learn all these lessons along the way. You learn that you start doing this thing. Like I'm sure this happened to a lot of investors in the channel. You start doing this thing where it's like, do I really need that t-shirt when I could buy more assets, right? When I could buy more stock, right? You start getting into that mindset. So for the younger investors, don't be piling into this, SPY crap. Like you don't, not SPY crap, but just any income ETF, because it becomes harder to move that needle, right? Like everyone's like, oh, you could compound faster. And that's a total lie. You're not going to compound faster than the freaking index, or some of these other pure play ETFs, right? My opinion is just my opinion. You can do whatever you want. It's your money, but I think that eventually, if you were to reach like 100K in like a S&P 500, a VGT, QQQ, then you could start thinking about adding an income sleeve, right? Then you could start thinking about that. But you have growth completely taken care of at that point. You're going to grow with the market, right? So that is just, again, one of my thoughts. Oh, damn, we have Alex in the chat. Man, I haven't seen you in a long time. Welcome back. Dividend Rocket says, keep it up. I'm in Taiwan this week, Hanoi next week, and Arizona in Feb. Hopefully I'll be in Thailand after summer. Hey man, please let me know. I would definitely come meet you up. Damn, I want to get out to Vietnam. I put it on my map today, or map for my goals this year. I'm going to Bali for sure. I'm going to Bali, and I am going to go to Vietnam. Absolutely. Dang, thank you, Dividend Rocket. Appreciate that. He says, I use my dividend high yield income to buy more shares of SCHD, GGDG, DGROW, and SCHB. And I use XPay and RDT to geo arbitrage, semi-retire in Asia. See, that's the beauty right here. That is so cool, is the geo arbitraging, because that's exactly what I do. There's a few of us, a few YouTubers out here. So Dividend Rocket is one of them. You also have there's Dividend Nomad, I think, and Nomad Investor who come to mind. But we all live out here in Southeast Asia, and we can live off, well, I don't know about Nomad Investor. I don't think so. He's not at that point. He actually has remote work. But we could have our investments with small dividend payments, something like $500-$600, cover at least rent, right? Cover rent at like these luxurious condos or whatever, right? And then, if your portfolio produces, let's say $1,000 a month, right? Well, that's just $1,000 you get for living here in Thailand, because the cost of living is relatively cheaper than in the West. So, that geo arbitrage stuff is super, super interesting. A lot of people can do it. And it's something that's achievable. You don't need $2, $3, $5 million, in order to retire. You can live better if you geo arbitrage for far less, right? And you can do like remote work or something like that. 14 Real says, focusing on assets over liabilities is my mindset all the time now, 100%. I remember I would have to convince myself to buy new clothes when I was, really starting to get into investing. I'd really have to convince myself to buy clothes versus shoveling the money into like assets, right? Because I was saving up to buy real estate, and I was like, no, this dollar can go to real estate. I need that money. What, $150 for 4 pairs of shirts or whatever? Like that's highway robbery. I'm not buying that. Like no, So I got into that mindset, and it was honestly a good thing. Like it wasn't toxic by any means. Some people were like, oh, that's toxic finance. It's like no, it's just I prioritized living, or prioritized delayed gratification, right? That's what it was. Shoveling more money into assets that grow over time versus buying, luxurious goods, right? Like Nike sneakers and all that crap. Like I never really bought. I never really got into it. Because I was always under that firm belief that, if you worked hard, for me, it was like I really worked my butt off, 26 to about 34, 33, whatever, grinded like hell, like just grinded, right? And now I can live the life that I have. And I don't want to work anymore because, like I said earlier, there's a lot more to my story anyways, of why I don't want to. Anyways, I can go on a whole tangent. Yeah, I don't know if you know, but yeah, go to Reddit. Go to Reddit. That is toxic finance. Bro, that is toxic finance. You can't even post, like, if you say you buy, I just want to check this. If you say you buy SCHD, you're going to get like 1,000 comments that say why SCHD is garbage. But going back to Dividend Rocket, because I think this is also important. I don't have a graphic. I wish I did. But actually, before I start that, I just want to check on the index. What's really interesting about Dividend Rocket strategy is that he has what is like slowly starting to become adopted as like the income sleeve, right? You guys have heard this, right? You use basically the income sleeve, the high yield stuff to buy more safer assets. It's basically a cash extraction strategy to move it into higher growth plays, right? Higher growth, passive plays, index based, that kind of stuff, right? That's pretty much what I followed. Like I was reinvesting a lot of my distribution back into the portfolio. But yeah, that's really all it is. And you have to just kind of, when you do that, you just have to have this expectation, like, you're not worried about NAV. You're not worried about NAV erosion. You kind of turn all that stuff off that is in the cesspool of YouTube, X, and Reddit, right? You kind of have to just turn all that off, follow the plan, follow your framework, use that money to fund things, right? Fund, have like a plan set that any distributions produced from this is going to go into, these funds. And he picked a bunch of growth funds. And I mean, now he gets to live like no one else, right? He gets to travel all over Southeast Asia. Everything is funded by his dividend and distributions. So again, I think that kind of stuff is super important. And and I'm going back to, the young investor. A young investor ain't like, unless you're making 100K and piling 90K of that into Neo SPY or something, or some high yield funds, you're just not going to do it. In my opinion, it's going to be harder. It gets harder to move that needle. Just my thoughts is all, right? I think, again, new investors who don't have any assets whatsoever to their name, has a brokerage account of 0, should start with a simple index and then build their way up. And then when they have some type of net worth, some type of asset on the balance sheet of their personal balance sheet, then they could start looking at income funds and fiddling with that crap. But by and large, primarily invest for growth. Let's see. Skeptic says VT and chill, bro. That's it. A VT and chill. Citizen of the Year says weekly dividends because we can't budget in Panama. Yes, that's where he lives. That's where PI lives. In Panama, I believe. I thought it was Argentina. I could be wrong. Dividend Sith says, "Fi, look at that for dividends and growth." Well, why not? Fidelity. Let's see. Oh, this hasn't been out that long. Wait, has it? Well, no, it has to be. Yeah, there we go. There we go. Okay, yeah, so it's been about a year and change. That's not bad. All right, so it did recover, did really well. 157 holdings. Let's see. Does it show us? No, it doesn't show us the yield down here. What a rip. What a rip. What a rip. So R14 Real says, I use the paycheck to portfolio system along with margin for my portfolio to pay my expenses. That's one way to do it. Yeah. I haven't really checked out his stuff a lot. I know he has a pretty big fan base. Like a lot of people like his strategy. And he eats his own cooking, which means that if he says he's, you know, or if he says do something, it's because he's doing it, right? So he's not just, you know, theory and you know, charts and all that stuff. Like he's actually doing it, which I like. There's another YouTuber out there you might like is, and I'm going to forget his name because I haven't said it in so long. Hold on. He is Fully Invested Fi. So shout out to Fully Invested Fi. He also does something similar. So I would check him out if you haven't checked him out before. But yeah, he does it as well. So let's see. Let's check this out. Man, I just went on this really, really epic rant. So I appreciate you guys. That was a great question. I think that is a good question for discussion, is if you could start all over, what would be 5 funds you would invest into? Knowing everything you know now, what would be the 5 funds? Citizen of the Year says, what about MU stock? Micron. We covered Micron earlier. We covered Micron last stream. I mean, you just did a video. Citizen of the Year did a video on Micron. I haven't checked it out yet myself, but I'm sure it's pretty good. Let's see. Bring this over here. When I get to StreamYard stuff, we'll have to bring you on, Citizen of the Year. Skeptic, again, I want to get, I'm telling you, Skeptic, you need to start a freaking channel, dude. You have all these obscure freaking fringe ETFs you keep dropping. And I think that could be a whole channel in a of itself. So anyways, let's take a look at this Fidelity one real quick. Yeah, so R14 Real says he watches them as well. The fully invested Fi. So yeah, really, really good dude. I think his stuff is good. Oh my God. Padre, I totally forgot about the draft pick. Damn, I meant to drop a message this weekend. I'm going to get that message out today, so we can get started, because it's already the 20th of January. Damn, I totally forgot. Appreciate you reminding me. So yeah, for you guys watching right now, for the channel, what we're going to do, we're going to have kind of like a draft picks, so stock picks. So people in our Discord community, what we're going to do is we're going to have basically, you're going to get a hypothetical 100,000, right? $100,000 hypothetical. And you could pick up to 10 stocks, only 10 stocks, single company, or commodity spot price ETFs. So no broad-based ETFs, no indexes, no leverage funds, none of that. And we're just going to see how they perform for the rest of 2026. And then whoever has the best performing portfolio, there's going to be a prize, right? I'm the one who's putting in for that prize. All right, because I think it's just a fun little thing. It'll be fun for viewers. It'll be fun for the community. All right. Plus, we get to kind of see how other investors are thinking, right? In terms of either picks or themes or how portfolios are constructed. So it'll be fun. So, anyways, FYEE. Let's see. Okay, so I don't see anything in here. View fund details. Super Straight Guy says challenge on. Challenge on. I'd win by just, picking Alti. That's it. That's why I took away the ETFs in this challenge. Because I would win. Just Alti all day. Just 100% in Alti. No, of course not. I would never recommend Alti. I would never say buy Alti. I've always been a strong, detractor of Alti. I've never liked Alti. And I'm glad I never really invested into it. There was a point, I'm not going to lie. There was a point where I got a little FOMO. So I put $800 in, cause Alex is in the chat. So we were talking about, hey, let's just get a little taste of the Alti dividend, right? So we ended up putting like $100 in or something, and we'll just leave it on drip. Right. And then I was like, oh, you know what? Maybe I'll just add a little bit more, maybe just a little bit more. Right. And then, yeah, it's stupid. And then I got it up to, like I said, $800. I was like, this is stupid. I'm getting out of this thing. So I sold out. Man, cause it was like, I could rant on about this Alti thing, man. Cause you saw it out there. Yeah. We're going to move on from this, cause I want to spend my next 11 minutes before I end this stream, just downplaying Alti, right? Let's see. Alti. Again, man. So here's the thing. And we definitely saw this happen, right? You guys, if you've been around the block long enough, if you covered the high yield space long enough, then you know this is true. Like Alti was going down, 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 right? Then we had Liberation Day. Everything fell, sky's falling, everything else, right? Alti was like out, like $5 or something, $5 and something, right? And then we just had this crazy reversal. Trump was like, oh, hey, we're gonna pause the tariffs for 90 days. The stock market is getting a little jumpy, so we're gonna pause it, right? And then we took off, like we just parabolic moves, freaking 9% on the S&P 500 in a single day. Like it was crazy. So Alti started to recover, right? We could see that Alti was recovering very well. And what's hilarious about that, so right here, right? Alti started recovering. We had a crazy run up on the S&P 500, crazy run up. And then this is when all the videos were coming out. It was like getting so much inflows. It reached $4 billion in investor inflows. This is their largest ETF to date, right? Everyone was talking about the NAV is stable. They've stabilized the NAV with the new strategies, right? And it was just YouTube video on YouTube video on YouTube video on YouTube video on YouTube video, Reddit post upon Reddit post, Reddit post, Reddit post, X post, X post, X post, X post, right? Oh, they've stabilized. Everything is good. I'm making $5 million off Alti, right? With $10,000, right? Like, oh, if you put 10,000 in Alti, this is how much it's going to pay you every single week, right? Or how to retire off Alti. God, how many of those videos were out, right? It was so irresponsible of these damn content creators publishing so much of this content. But me just seeing through the ruse of it all, the euphoria, because it's happened so much in the past, right? And I'm not blaming these content creators. What I'm saying is the euphoria happens in waves. We saw that with GameStop. We saw that with GameStop. Huge run up, euphoria, then the inevitable drop, right? We saw that with FTX. All these YouTubers, content creators, creators, Twitter creators, Reddit, everybody, anyone with large communities or large followings, audiences, started to pump FTX. Inevitably, FTX collapsed, right? A lot of these finance influencers, this Graham Steffens, Meet Kevin's, Andre Jix, Tom Nash's, all these guys had their little asses ripped apart because so many investors had followed their advice, their sponsorships, and they ended up getting screwed, right? Now, now we look in hindsight and they're getting their money back, thankfully. But a lot of people lost a lot of money during that time, right? So I saw this crazy euphoria about Alti, and I'm like, to date, I've never made a video about Alti, and I have no intention of making a video. I was going to make a super scathing video one time, right? I was going to make a super scathing video about Alti, because I just wanted to say my part, but I knew that most of my audience were yieldmax fanatics, right? Which is fine, right? There's no problem with that. So I opted against it. I said, you know what? Let me not be so, one-sided. Let me try not to be, like almost coming from a place of anger. Let me just leave that video alone, because I felt it. I knew like people were going to get screwed with this because they don't know what they're buying. Everyone's like, oh, this is a hedge fund in a box, right? You're going to get it. And their yieldmax's VP of communications of marketing, right, is going on this large freaking roadshow telling everyone, oh yeah, this is a hedge fund in a box. Everyone loves hedge funds, right? It sounds so cool. Oh, I invest in a hedge fund, right? Everyone's buying into this story. And then comes the inevitable NAV erosion, right? All the videos start turning negative. Everyone's saying yieldmax sucks. Alti is destroyed. There's all this hopium out there. No, they stabilized the NAV. It's going to come back. Look, it's going to come back. And then it drops more. Meanwhile, the S&P 500 kept climbing up. And even throughout that dog and pony show that was going around YouTube, all these interviews, Jay Petrocelli kept saying, hey, a bull market helps. That's it. A bull market helps, right? He never said that they stabilized the NAV or that any of the strategies are keeping the NAV, flat or any of that. So everyone wanted a flat NAV with 80% distribution rate. Kind of insane, right? So anyways, it kept dropping and dropping and dropping. And now here we are today. The fund itself has lost $3 billion in AUM. That's a lot for a fund, especially a fund such as this, which is an income fund, right? Because there's not many like QYLD, XYLD, RYLD. I think those all together have about, I want to say under 20 billion. And those are like the freaking OGs of cover call ETFs, right? But even at their peak, they had 8 billion in AUM, I think for QYLD. Then JEPI and JEPQ came into the mix, and then they ran up their AUM to $2-3 billion, right? So again, very big deal. But now look, it's sitting at $1.2 billion, right? It's sitting at $1.2 billion. So obviously there was like just a ton of outflows, right? All these negative investors started coming out on YouTube, X, Twitter, freaking Reddit. And all those videos from those content creators hyping this thing up and, you know, interviewing investors, you know, saying how great this was. But not only that, you had investors who were buying this and not, again, fully comprehending what this actually is, what it was. So then when they sell out, they inevitably say this sucks, yieldmax sucks, alt sucks. But did alt actually ever drop its distribution rate? I mean, that's one question I have, right? I don't know if it has or hasn't. It doesn't look like it ever did. It's always stayed relatively within this range, you know, 51, 47, 48, 57, 49. Oh, this was earlier. Excuse me. Wait a minute. Oh, yeah. It's because reverse splits. Yeah. Okay. Yeah. So 54, you know, then it had 5 cents, 6 cents, 6 cents, 7 cents, 8 cents, right? So did the ETF ever stop paying its distribution rates? The answer is no. So was it doing exactly what it's intended to do? Yes. It never said it was going to keep a stable NAV. It never said it was going to, you know, appreciate in value like an index, right? It just said it might. So did it do exactly what it said it was going to do? Yes. It's just people had these mismatched expectations of, I always mess that up, mismatched expectations of what Ulti did or what it was going to do. Again, everyone's looking for that elusive unicorn ETF, 100% yield, capital appreciation, you know, keeping up with the underlier, and no NAV erosion, right? I mean, we might as well stack on a very low expense ratio while we're at it. So that ETF is never going to come around. I think people are wasting their time. Is the sector itself, you know, the high yield, you know, sector industry evolving, adding, you know, new strategies under the sun, having these, what, you know, Gary Gill calls these Frankenstein products where they're just, you know, it's a mishmash of strategies that they're putting in. Yes. But it's all left to be seen what, you know, how these ETFs are going to perform, because we haven't really hit a bear market. We haven't really hit, you know, anything that's detrimental to the stock market going up, right? We haven't had that yet. So if you guys want an idea, you don't have to look very far. Go to SPY, go to 2022, right? December 21 into 22. This was your bear market all the way up till October, right? That was 8 months of just pressure, right? Downward pressure. Imagine what that would do to cover call ETFs in general. Because again, cover call ETFs are pumping out distribution yields, right? Whether every week or every month, right? They're pumping out a distribution yield. What does that do to the NAV on a declining ETF? What do you think that's going to do? It's just going to make it go down even more. So yes. Anyways, guys, I spent the last 11 minutes ranting on about Ulti, ranting on about this high yield space and the problems here. So I think I covered quite a bit. All right. I'm going to get off this subject because, again, I am very passionate about it. I get why content creators, not just YouTubers, but I get why content creators in general, you know, whether they're on X, Reddit, freaking YouTube, doesn't matter, right? I get why they do it, right? Primarily, one, it's clicks and views. It's to build an audience. I just think it errs on the side of irresponsibility when you just show it in a good light, right? That is where it becomes irresponsible. There are some really good YouTubers in this space that cover, you know, the good, the bad, and the ugly. Shout out to Income Architect. You know, he does phenomenal content, right? He asks some of the hard questions. It's not just easy. Oh, how's your day? You know, like he actually digs and tears these things apart. So shout out to you. But there's other YouTubers in the space that do really good work. And you know, you have to kind of sometimes go back and, you know, do very entry level, like, you know, comparisons and things like that, because there's always going to be someone out there in the space, right? Not, and I'm talking about an audience member. There's always gonna be someone who's brand spanking new to this space, has no idea. Like I honestly had no idea about yieldmax. Like all I knew was high yield meant, you know, NAV erosion. That like I knew that since like before yieldmax was a thing, or before I knew about yieldmax. So I knew about that, right? So when I looked at yieldmax, I was like, nah, this is dumb. But the person that really made it kind of click for me was Pay Me in Dividends. So we were speaking and he kind of told me exactly, you know, like how to look at these ETFs and you know, what they are. And it clicked for me. And then I just went down this rabbit hole like I usually do, where it's just like an obsessive amount of research, looking at interviews, looking at funds, looking at, you know, comparisons, looking at other channels, looking at, you know, Reddit posts, all that stuff, and finally coming to a conclusion of like how I can use these. And I mean, I gravitate more towards roundhill just because I like roundhill, but it doesn't mean that roundhill is the best. They have their drawbacks, like we're seeing now, where, you know, leverage cuts both ways. You know, but I knew that going in. So people who are like, oh, roundhill sucks now. It's like, did you not know the leverage piece? Did no one ever tell you that leverage up is good, leverage down is bad? Like, did no one ever tell you that? Are they still paying out a distribution? If the answer is yes, then it's doing exactly what it said it would do. Right? It would go up in an up market, go down in a down market, and pay a distribution, right? So, yeah, I can rant on about this stuff like pretty crazy. Ro says, real talk, appreciate that. Ro says, I find the Canadian ETFs are better. Look at HDIV and HYLD. So I know like there's some people in my audience that are from Canada that you know, invest in HDIV and HYLD. I know there's a huge fan base around them, which is interesting. Speaking of the fan base thing, because now it seems like in finance land, there's communities built around fund managers, right? Or communities built around not just fund managers, but fund stocks. So like you have the Palantir community, you have like the Tesla community, you have the MSTR. I mean, they're split down the middle of haters and lovers. You have Lemonade, right? The Lemonade community. You have like all these communities are like the Robinhood community. You have all these communities like forming around stocks and around ETF managers. So again, I think it's really interesting. I don't know too much about Harvest. I do know that every time I look at a video for HDIV and HYLD, like it's usually positive. So, I mean, I tip my hat to them. You know, Ben Felix, you know, very, very prominent YouTuber, finance, kind of finance content. Everyone knows who Ben Felix is, but I mean, he absolutely slashed apart a lot of these income products, just absolutely tore them apart. And then there's Kamikaze Cash, absolutely destroyed these products. I think it's good that investors should look at these videos, even if you don't like the content, even if you're holding the ETF and it makes you uncomfortable because you're like, oh man, I'm second guessing myself. You should still sit through it to see a different perspective. There's, you know, I'm not going to say which community out there. There's a couple that if you speak negatively about these funds, they immediately ban you or they punish you, right? They kick you out, whatever it is, right? Or put you on mute, right? So I think that is toxic finance. Coming back to skeptic, that's toxic finance because like people should have two differing points of view, right? The answer is somewhere in the middle. Even in the community that I'm in, right, the Discord that I run, I have differencing of opinions with some of my members, but it doesn't mean I think they're dumb or that anything is stupid. It's just I don't agree with that. Here are my reasons why, and then you know they'll shoot back. Well, I think you're wrong. Here's why, and I think that's productive. I think that's good discourse. That's how investors become smarter. Because if I'm the smartest person in the room, then I'm in the wrong room, right? And you also start creating biases. You start creating biases. That leads to that could lead to potentially a lot of losses, as people in the yieldmax community have found out. Okay, so I keep going on these rants. Let's see. Padre says all the passive investing is going to drag a bunch of people's portfolios down through, though no fault of their own. That is true. That can be true. Absolutely. But I also think it's good depending on, and I hate to say it, but how these instruments are embedded into a person's portfolio. That's a fancier way of saying how these ETFs are used, right? Because Citizen of the Year, I don't know if he's still here, but you know, every time he published a negative view on income funds, he'd always get, oh, you just don't know how to use these ETFs, like they're a Swiss pocket knife, right? But no, in all seriousness, these ETFs, they have a place in people's portfolios depending on their goals and their understanding of what the ETF does, right? If they really understand what it does and they accept the risk, then, you know, let's say it's like a 5% of their total portfolio, but it produces 80% of their distribution or their dividend income. Is that really all that bad? I mean, I don't know, left to be seen, but I think that would be a pretty good trade-off, you know? So anyways, R for real says, this is exactly why I don't go heavy tech focus, because I realized how much it affected my portfolio. I learned that the hard way. I'm still very high beta, high tech, because I have conviction in the story. I have conviction in the AI thesis. But it sucks. It sucks when these drawdowns happen. R14 Real says, yeah, I'm selling out of a few Roundhill holdings tomorrow. They're not bad, but they're not bad. I got in at a great price, but aiming to solidify my portfolio more and want to secure my Roundhill profits while I'm up in gain. That's smart. Yep, that is smart, because we're supposed to have that big one, right? That big drop, or maybe it's a grind lower, right? 15, 20%. Being in the Roundhill funds is definitely going to be an interesting ride. I have no intention of selling. I'm going to try to stick to that. Of course, you know, emotion, pain, all that stuff, you know, it does play a part. But I've held MSTW. I'm down 67, almost 70%, I think. But I have no intention of selling. I just won't. I refuse to sell. Now, I could have sold when I was down 20% and been fine with the cut. But it's just a conviction. Like, I have so much conviction in MSTR that I refuse to sell. Skeptic says SMH. Shake my head, or SMH the semiconductor ETF. Financial Value says you should read Bogglehead 3-fund portfolio book. Man, I've read that so many times. Not so many times. I've read that, visited their forums, done enough research on the Bogglehead community. You talk about they're a well-meaning toxic community. They're a well-meaning toxic community. Because anything that is not 3-fund portfolio is a waste of time, right? Simple Path to Wealth was my shit. All right, Simple Path to Wealth, JL Collins. He did it all. He included REITs, he included bonds, he included international, he included this, included that. And he said, man, at the end of it all, an S&P 500 is all you need. He's like, get that to $1 million and then just 4% yourself for the rest of your life, right? If you get that to $1 million, 4%, you do 4% withdrawals pretty much forever, right? Yeah, so Simple Path to Wealth was my shit. I like that, because the 3-fund portfolio, I mean, yeah, like international is doing good right now, but international has underperformed a lot when compared to the S&P 500. And again, I'm a big believer in America. You know, a bet on America. I will not bet against America. So why would I have international, right? That's one. Plus, most of the companies in the S&P 500 are international anyways. So what's the point? But then people will say, oh, well, you got to include bonds. Like, hell no, I'm not going to include bonds. That's what financial service professionals recommend. You have your age in bonds. I just choose not to. I don't know. I'm comfortable with the risk being in, you know, high growth ETFs. I don't care for bonds. Will I ever invest in bonds? I personally don't think so. All right, guys, I think that's going to be it for me. This was a 2-hour stream. We're going to have one hell of a rocky week. It's already shaping up to be that way. Let's take a look one last time at what SPY is doing. But yeah, I think we're going to have one hell of a rocky week. We still have the SCOTUS Supreme Court deciding on tariffs. We don't know what's going to come of that. We also have the Greenland stuff coming up. You know, the Dutch just landed or are transporting 200 additional troops to Greenland. Not a good sign if Trump is ruling out the use of force, right? And talking about a military takeover. That is if that was to occur, if we're to attack our allies, that's going to be bad. But he said publicly, like, NATO would never back up the United States in any of its wars, which is true because NATO does not extend beyond its borders, right? It's a collective defense pact, right, for NATO countries. So duh. But he's also talking about acquiring Greenland pretty much anyway. And right now there's a U.S. envoy. I don't know if they concluded talks or if there's any news about it. I haven't checked. But there was a U.S. envoy talking to some of the partners out there on the acquisition of Greenland. I still think Greenland is going to happen because of all the critical minerals that are out there. The United States is trying to get away from China. So, if you're into metals and mining companies, something to consider, right? We covered ETFs. There's a couple ETFs, broad-based mining ETFs out there. So, people should absolutely at least keep their ear to the news and see what's going on. But outside of that, guys, I appreciate you. You guys have a wonderful night. Thank you for joining and cutting it up with me in the chat and listening to me blabber on about ulti. And I wish you guys all the best. I will see you guys in the next stream. You guys have a wonderful